Hey everybody, Economic Ninja here. I hope you're doing well. I want to talk about a story that's out of the Zero Hedge, and it has to do with the Fed and why investors are quite frankly concerned that they are going to continue to raise rates. Guys, you saw in December when the Federal Reserve raised only 50 basis points as opposed to the standard 75 basis points that they've been raising quarter after quarter, it seems like, for almost a year, about 6 months, 7 months. All of a sudden it came to 50 basis points and the markets rally. They cheered that. Why? Because it's monetary heroin. Literally, it's when they lower rates or slow the rate of rise, markets know that they're going to get juiced up with a lot of stimulus, people spending, people speculating, because that's what the investor on Wall Street needs right now. Literally monetary heroin, easy cash, cheap injections of credit. For lack of better terms, this is what everybody's watching. Well, the employment data came out and it turned everybody sour. And the facts are the Fed has not done their job in destroying the economy yet. And that is literally what they're trying to do. People need to realize that. The Federal Reserve needs a lot of people unemployed so that those paychecks or the lack thereof do not go get spent into the real economy. So then they have the excuse, well, we better lower rates again and just inject cash into the economy. By the way, every dollar they inject into the economy is owed back to them with interest, okay? So just a brief synopsis of really what's going on behind the scenes. It says right here, stocks and bonds dump on good, quote unquote, jobs news. Rate hike odds jump. It says futures chopped sideways to higher overnight than a triple whammy of better than expected labor market data sent stocks and bonds reeling as market expectations for the Fed's rate trajectory shifted hawkishly. Remember, before this, like I said in December, they only raised 50 basis points. They lowered the rate of rise. They still raised, but that was giving investors and Wall Street hopes that they were going to start to do an about face, all right? Now it says right here, terminal rate expectations are rising. Expectations for rate cuts in H2 2023 are fading. It says stocks bounced briefly on unusually dovish sounding comments from the Fed's Jim Bullard, who noted 2023 may be a deflationary year with rates close to restrictive. And to say that he is correct is an understatement, because we are absolutely going to see deflation in so many other sectors, or any more sectors than we already are. Remember, deflation is already starting in the auto industry. There's some interesting issues there to work out. We are already starting to see deflation in home prices because they are starting to get lower because days on market are extending. We are seeing deflation in travel and leisure, and especially we are seeing deflation in subscription services like Netflix, things like that. For heaven's sakes, we're already starting to see deflation in Amazon and web services, tech, and things like that, because people do not have as much money as they did last year or the year before, simply because they've been robbed through inflation. All right, that's one aspect. But then you also have to look at the second aspect, and that's really going to take effect here in Q1 of 2023 and Q2, and that is perception of the strength of the economy. That is going to send so many more millions of consumers reeling, or get them concerned enough, or cause straight up fear to stop spending. Okay, now that is when you really start to see deflation just take off. Now, right here, something else that Jim Bullard said was a strong job market means it's a good time to fight inflation. Now think about that. Think about what he said. A strong job market means it's a good time to fight inflation. So what do? You ratchet up the screws tighter on the job market. And how can you do that? You raise interest rates. When you raise interest rates, the borrowing costs for companies increases exponentially, especially, now think about that, especially when you're dealing with a 75 basis point hike, that eventually, and I know we're talking about the Fed funds rate, it eventually trickles into capital markets and lending, the lending situation for not only corporations, but even the man on the town, just you and me, right? What happens is when it costs more to borrow money, companies get more restrictive in their spending. And one thing they do is by cutting fat and saving money is they start to lay off people, or they slow their hiring process or freeze hiring, okay? We've seen that. I just did a story, depending on when this comes out, about Amazon laying off 18,000 employees. It was a big surprise, but it wasn't a surprise because we've been talking about this on the channel for the last 6 to 7 months. We see Salesforce and other companies doing mass layoffs, and this is just the tip of the iceberg. You are going to see fireworks in the next 3 months when it comes to unemployment. Bullard is right. The labor market is dramatically decoupled from tightening financial conditions. It says right here, give you an example. Bed Bath & Beyond was battered to 30-year lows on going concerns fears. The stock is literally at 30-year lows, and we're not only seeing Bed Bath & Beyond continue to lay people off and close stores, but we're seeing it, like I said, Amazon, UPS, and others. This is going to get worse, and I think people need to prepare for this. If you do not have a second means of income, cash flow, you need to start looking at that now. I'm not joking when I say it's as easy. This is what I put in the side hustle course. It is as easy as going into your garage and finding the things that you haven't used in the last year, liquidate them, and then learn how to take that money that you made and flip it and flip it and flip it again. You need to have a second source of income because it may be you watching this next that gets laid off and it's a total surprise. Do you have debt that you can get rid of and pay off? Do you have the ability to have a savings or have some food stored up right now? Never mind the earthquakes, tornadoes, and all that stuff, but just good, conscious, sensible, common sense living. That approach will take you from zero to hero in this next crash because you will finally be able to be like the elite and take advantage of a downturn in the market and buy things on the cheap. I don't want you to be a victim. I want you to be a conqueror. Guys, my name is the Economic Ninja. I believe in America because I believe in you. I'm out.